Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I'm going to go over uranium companies and give you my opinion on which ones I think will do very well. And I'll probably take a little bit different approach than some other people. I usually am okay with taking on more risk. I am okay with um, I don't know. I have my favorites. I have my spots that I like to put my money, and I'll tell you where that is. I can kind of describe the situation in uranium here real quick, and then you guys can look at the valuations per pound. I'll touch on that as well. And again, I have all this information on my website. That's down below in the description link. Become a platinum member. You get access to absolutely everything, and all of these companies are all charted out there. I give you access to my trading view. You can go to my trading view and look at the charts from there. I can give you my watch lists. We do videos, questions and answers. We do all that stuff. So just to let you know, it is available if you need to see this before what I think's the biggest commodity bull market that's coming. So let me go through a little bit of background first, and then I'll go into the companies and where they sit on the Lyon Curve. The Lyon Curve, if you were to look at this is called the Lyon Curve. We've got high value, low value. This is the value that is given to the shareholders. This is the life cycle of a mine. And the majority of value that's created for shareholders exists in the discovery period, which is this large one here, and also where they develop. So this is the development. I call this a developer company. They're all sitting on the bottom here in uranium for the most part, and then they have to develop the mine, add value for the shareholders, and then eventually those pounds in the ground get revalued higher. So what we want to look for and how we want to reduce risk, if we're looking at uranium companies, is we want to find somebody who's over here but has struck something in the ground. The speculation portion is on the size of the deposit and them defining what that deposit is versus just randomly going in and taking a shotgun approach. Now, I do the shotgun approach a little bit. I do. This is more about a betting strategy over here than it is in controlling your position sizes and putting money what you think are the best bets. I put money in absolutely everything that I think will do well to some degree. You know, I put some money in it. Doesn't mean that I'm loading up and putting 5 to 7% size positions in my portfolios of speculative little junior explorers. I might put 0.5% or 0.25%, or maybe I put a couple grand or a grand in each of the companies, spread it out amongst all of them. And if 1 or 2 or 3 of them hit, the returns, the symmetry in the bet is so large that it doesn't matter if you lose on a few of them. Last uranium cycle, the explorers all did pretty well. So I think that this is a sound approach to the uranium bull market that's coming, is kind of spreading out a little bit of money across a whole bunch. And I may own, 10, 11, 12 different explorers in the portfolio that I've got, a little bit of money in each of them. And I've overweighted some. The ones that I overweighted were the ones that have positive discoveries. They have discoveries. They just don't know how big it is. They don't know what the size is. They're still defining what that deposit is. Now, the other ones that I'm really loaded up on are the developers. That means that they have something in the ground. They've got a reasonable size of what that deposit is. They've got an estimate. They've gone through and they have pounds in the ground. Now I'm just evaluating, well, what am I paying for those pounds in the ground? And where are they in this development stage? And has the management team done that development before? So I'm basically loading up in companies that are here and here. I don't have too many that are up here where their valuations are high and they're very close to producer. I just think that they will underperform given where we are in this cycle. So that's the life cycle of a mineral discovery. I'm focusing on these two, and I'm going to refer back to these two positions. Developer is this, explorer is this. Now looking at the cost curves, for me, I've been going more towards the right-hand side of the cost curve. What that means is I'm going after higher cost producers. The higher cost producers, and I'm not saying I'm going just solely on that, but I like going on that because they're going to get hit to the downside the most in the downturn. So if we have a radical change in the price of uranium, a radical change, and it's very fast, the high-cost producers generally perform the best under those types of market conditions. So I'm looking at high-cost producers where we are paying low pounds in the ground, so low market cap or enterprise value in relationship to how many pounds they have. So if I can find some of those, I usually spread out amongst the developers that have good market value to pounds in the ground that are high-cost producers. And usually the high-cost producers will be the cheap ones with the pounds in the ground that way. And then looking out, this is what the world needs for new uranium mines. This means that we have to build a lot of uranium mines, new ones. This means that the chance of going into production has never been so high before. Now, is this going to matter in a large, we'll call it blow-off move? It might not, because these are out a ways, but most of these companies will go into production at some point, I think. It'll just take some time. I think we're going to get a blow-off phase somewhere in this depletion phase 1 or 2. That's where I think we're getting the big blow-off. It's coming up maybe a year or two out. I'm just positioning now. This is the uranium supply-demand deficit. You can see the deficit in 2022. That's this guy here. And then we blow on out. It means that the deficits are coming. It means that we are going to run into our inventory. Our inventory is going to get eaten up. Once our inventory goes to critical levels, we'll figure out when that is, because the price will start to move dramatically. So it's coming very soon. The timing is now, in my opinion, to be looking at this. Now, if we were to look at the charts, the charts are also telling us that the time is now. It's saying that if we look at the ratios, uranium's starting to outperform everything. We're at a little bit of resistance. The resistance here is this guy here. So we're coming up, and we just got to break through that resistance for a move higher. And we're doing that's against silver. This is uranium against the S&P 500. It's starting to break out past its resistance line to move on up. We might get a little bit of a stickiness through this guy there, through previous resistance. The higher the volume and the longer something trades at a certain spot means that it's got a little bit of stickiness when you go back through it in terms of some sellers. Then you've got uranium to gold. That's breaking out to the upside. You can see the pause there at the resistance line, and we're starting to break to the upside there. Then you've got uranium to crude oil. I'm going to put it on log just because of this line here. This guy's about to break to the upside of this downtrend line. So basically, we have an alignment where uranium could break at any second here to the upside. So then let's go into some of the companies here. So I've got the companies here. Let me zoom in a little bit so you guys can see them a little bit better. These are the companies on the left-hand side, the name, the ticker symbol, the market cap. These are what I have found to be the pounds in the ground. Hopefully these are as accurate as I can get them. And this is the dollars per pound. Now, even if they're off a little bit, what I'm looking at is the relativity. I'm looking at the relativity. So if I'm off by 20 or 30 million pounds because they updated it or something, I still think that the relativity is still there. And the ones in the red are the ones that I basically have invested in. Next Gen Energy, I have that one. Global Atomic, Fission Uranium. Now, I have positions in Paladin and UUU and DNN. They're just not as large. And then my bigger size positions, the one that I have overweighted is Encore Energy. And this might be a little bit different. They did do a buyout. Hopefully that's about right. Deep Yellow is one I overweight. I overweighted Forces Metals. I do have some in UEXCF. I overweighted Bannerman quite a bit. I overweighted Goviax. I don't know if it's getting into a larger position, put it that way. Now I have a little bit in all these down here. So I've got all these kind of explorers in very small amounts. I did overweight baseload energy, this guy here. And there are companies that, Scott has gone over, like E92. I don't own that one. And then Elevate is another one. And I don't own that one yet, at least. But I'm thinking about it. So the ones that I really like are Bannerman, Goviax. I like Forces Metals. I mean, these are cheap. These are probably going to get taken out. One or two of them are going to get taken out by probably the Chinese, I'm guessing. We've got Deep Yellow, another one I like. I like the CEO, John Borshoff. I think he could maybe pull it off. Bill Sheriff is really good. I like Encore. I like Fission Uranium. They have a very nice deposit up there. NextGen does too. And then I've got Global Atomic. I think these are my favorite companies because of most of these are developers. These are all developers up here. They're all developers. And I think they're cheap in relationship to their companions. I think NextGen at $9 is cheap compared to Camco. And it's cheap compared to Paladin. Even though Paladin's cheaper, I still think NextGen and that's deposit is worth more than what it's getting valued at. They've got a monster deposit up there, and they could probably evaluate this to maybe get a little bit more out of it as they define it even better. So those are the ones that I like. And I like them because I think that some of them are higher cost producers. They are very cheap if you're paying it on a dollars per pound. And if they can pull it off this cycle, and let's say a bunch of money rolls in here, the ones that will get revalued the most, I think, are the high cost producers, the enterprise value. So I've positioned myself more so into I call it the African crew. The African crew are the ones that are over in Africa, namely Namibia. And I like that jurisdiction. So I kind of spread out amongst all of them. And those are the ones that I think that will outperform. Am I going to be right? I mean, I don't know. We'll see. And baseload is the one that I overweighted for the explorers. And they've got a discovery. They have something down there. They just have to define what that is. And it could be a high concentration, high uranium concentration deposit, because they're getting some pretty good numbers, getting very high counts per cycle, much higher than a lot of the other ones. So hopefully they hit the mother lode. Hopefully they can define this thing as uranium prices are going up. And if they can do that, that could be one of the best performing uranium explorer stocks there is, or maybe even the best performing stock of uranium, period. Looking at Elevate, Scott put together a pretty good case saying that they could drastically increase their pounds in the ground, which would add value to the shareholders, creating a dollars per pound market cap per pound basis of one of the cheapest there is, if they can bring up that estimate, which means that you could have a very good investment there in terms of value creation. And then E92 is the other one because they already have a discovery. They just don't know how big it is. So those are the ones that we both like based off that. And I've taken a little bit more risk and spread some money out across all of the junior companies. For whatever reason, we don't know where this money's necessarily going to flow. We don't know where it's going to flow. We don't know how it's going to impact. We think it's going to go into the exploration area. So I've just put a little bit in each. And if one of them gets a 50 to 100 times your money or greater, I mean, who knows what the necessary reason is. And they can do this very quickly. It can happen in 2 years. So that's my take on it. Doesn't mean I'm right. It's my financial opinion. Please don't use it as advice. But obviously, I've overweighted the higher cost African crew. That's what I've done, and they've got low dollars per pound, which is these guys here. Low dollars per pound. DYLLF, Forces Metals, Bannerman, Goviax, and they're all in the development stage, and they are progressing. Global Atomic's another one that's pretty cheap for how far along they are in their development. So those are the ones that I like. Those are the ones that I am betting on with a little bit more cash in them. I do own UEXCF. I just don't have as much. I don't have that confidence in that company as say maybe some of the other ones, but it doesn't mean that they won't. It may pan out. I just don't think that they'll get into production this cycle, perhaps, or it'll be a little bit later. So if you guys like the content, give me a thumbs up, subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.